Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is an updated look at the euro versus US dollar as we head toward the close and we head into the new day, which is going to include the US jobs report. If you look at the price action during today's trading right through here, we've seen a move to the upside, we've seen a move to the downside, we've seen a move to the upside. So volatile price action. But during that ups and downs, we've seen some key technical levels hold support and hold resistance on the downside and the top side. So let's talk about them. In trading, what you want to find is some levels that you can lean against where traders can define risk and limit risk. And one of those levels over the last few days has been the 200-hour moving average. That's the blue-green line in this chart. And you can see the number of different times the market has come close to that moving average line over the last 3 trading days. And each of the time the market came close, we found sellers, 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 and again, sellers here today. So that level is a key level that we're going to be paying attention to going forward. If the price is able to get above that level, guess what? The bias turns more positive for the euro versus US dollar. Adding to that 200-hour moving average is this trend line. This trend line connects highs going back to the highest high that we saw going back at the end of June, or toward the end of June, right through here. We also had other those lines connecting, or this trend line connecting to here and again here. So not only do we have the 200-hour moving average, we have the trend line forming the borderline, the level that if we get above, it's going to be more bullish going forward. That includes tomorrow during the unemployment release at that time. So we will be paying attention to that level in the short term on the top side. Now, what about the downside? Well, on the downside, there are a few things that are in play. In particular, if you look at the low price that we saw last week, that level came in at 1.0834. Our low price earlier today came in a little bit lower than that level. And then this low right here during the US session came in just a little bit lower than that level right there. And each of those lows were ahead of the 100-day moving average. That's the blue line in the chart. Also the 50% retracement of the move up from the May low, which you can't see right here, to the high price that we saw right here. That 50% comes in at 1.0822. The 200-day moving average comes in at 1.0826. So those levels are the support levels now for the euro versus US dollar right here. And as long as the price can remain above that, it's more bullish. As long as the price can remain below the 200-hour moving average and trend line, it's more bearish. In between, what are we? We're more neutral. We have a market that's sitting there fighting between the buyers and sellers, selling at the highs, buying at the lows, and we'll duke it out until we declare a winner. And that might not happen until tomorrow morning, folks, when the unemployment numbers come out, and it's either stronger or weaker, and we'll see what reaction the market has. But the good thing about today's price action is that we've defined those levels. We know that there's support at 1.0822 to 26. We know that there's resistance around the 109 level currently, and it's going to be moving a little bit lower as we go along. And as long as we know those levels, we can trade them. We know that a break to the upside it should lead to further upside momentum, and a break to the downside should lead to further momentum in the downside. And in between, it's anyone's guess. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.